Hey guys, thanks NFT New York City for hosting us. Great timing, given tax day is only a couple days away. I'm Justin. I used to work at PwC before building my practice on the side during the pandemic and then going off on my own. In that moment, got into NFT crypto taxes. I got a great panel of guests with me who can bring a lot of value from different angles. Bryan.
Hi everyone. Bryan Christenson. I'm an attorney, but I'm not a tax attorney. And I'm actually a client of Justin's. And so he's helped me with my filings, and I'm kind of here in that role. But also, if we have a few minutes towards the end, I have been building up a blockchain NFT practice at my law firm, Hinshaw and Culbertson. So like kind of echoing what's been said in this room already, though, there's just a ton of legal landmines if you're launching a project. So if there happens to be any questions about that or anything, or if I can tie that in, I will. Otherwise, I'll be here as like a filer.
I'm Jamie Szal. I am a tax attorney. I focus on state and local taxes, particularly for businesses, and trying to figure out just what is your compliance obligation in this space as a creator, as a developer, as a platform that is making blockchain accessible to all people. And so that's what we're going to focus on today.
I'm Serge Gautron. I go by Sir Goat on Twitter. I run my own tax practice up in Winnipeg, Canada. We specialize in cross-border taxes, so I do Canadian and U.S. tax returns. Most people don't know the U.S. taxation system is based on citizenship rather than residency, so no matter where you live in the world, you got to file your 1040. And I'm really here to highlight how there's differences between the tax treatment of different crypto components depending on which jurisdiction you live in or which jurisdiction you sell in.
All very important factors. Let's go through and start with probably the most obvious thing, which is the filing requirement. The very first question on the Form 1040 is basically, did you buy, sell, receive, or do anything with crypto? Very low bar when it comes to getting around that question. Essentially, the only way you could check no to that is if you purchase crypto or NFTs with US dollars and did nothing with it. You didn't sell it, you didn't receive any crypto. And they do that on purpose. I tell my clients that they're basically playing on the honor system. They want to know who's reporting, who's not reporting. I recently have seen 4 new clients in the past couple of weeks receive notices of unreported crypto with bills from $20,000, $25,000, $30,000 owed to the IRS, due within 7 days. So this is coming. This is a serious topic. And now that I've scared all of you into sitting up into your seats, there are a lot of opportunities to use this tax code to your advantage. And also, let's educate you a little bit on how to report it, what's the tax treatment, and there's plenty of using the tax code to your advantage. Have you guys been seeing similar with your clients?
I will say, less so on the state and local side. I think it's a pretty universal understanding. States tend to be further behind the IRS in the development of guidance. But what we have seen is more guidance coming out from states on the sales tax side as opposed to the income tax side for blockchain transactions. Heads up, you do have a sales tax obligation if you are selling any digital assets, whether that's NFTs or if you're in the kind of blockchain as a service, making the platform available. So as a business, you do have not just one tax return to file, there are many different types of taxes that could be at play on the sales tax side. And I think that's where we have seen a lot more of the development.
I'd have to agree there. The government is making, all governments are actually making huge efforts to make their taxpayers compliant. For instance, that question that Justin just mentioned on page 1 of the 1040 used to be on Schedule 1, which means if you didn't file Schedule 1, you didn't have to answer that question. You could have had a massive bag and you don't have to answer that question. Now it's on page 1. So you answer no, and you have perjury. So know your obligations. Canada is also sending out similar letters that Justin just mentioned.
You can barely get your name on the return before they want to know about your crypto holdings. So it's quite serious. The AICPA in my continuing education course says this is going to be the #1 area of enforcement that they are going after. Before we get into the nitty-gritty of how crypto is treated, which I want to get to quickly because I know we don't have much time, record keeping is probably the biggest component, because no matter how it's treated in your jurisdiction, how you plan to classify it as business, if it's sales of crypto, if you receive an airdrop or receive crypto and it's ordinary income, regardless of treatment, record keeping is probably the biggest component to working with yourself, with the tax software, with a tax professional tax attorney, and getting your return filed correctly and saving yourself the most money. Bryan, I know we talked about this, and you had a little something you put together long before we even started discussing your crypto taxes.
Right. I'm not sure why, but I opened up a Word doc, and anytime I bought or sold crypto or NFTs or anything, I would write a little notation of what I bought, what it was for, if I had just, bought crypto from an exchange and then sent it over to my hardware wallet and whatnot. And so it was really helpful, because even with the software that you can use at the end of the year, I didn't know what I did on April 16th of 2022. But when I looked back at the log, it was saying, oh, I bought this and this. And then I also kept a separate Excel spreadsheet of when I bought and sold everything. So I might have done too much work, but it definitely was helpful when I couldn't remember what I did on a certain day, or there were several transactions, and what you did 8, 12, 15 months ago, whatever it was, it's hard to remember. But is that something you recommend, or is there an easier measure?
That's helpful. Probably best practice would be running your crypto transactions similar to how you would run a business, and upload it to a crypto software of your choice and reconcile it at the end of every month, similar to how you would rec your bank account, check your P&L if you run a business. That's my recommended route. Do you guys advise your clients to do similar methods?
Pretty much. I tell them you're running a business. Whether or not they want to say they're running a business, I just want them to take this seriously. Because the issue, like even my crypto taxes, I'm a little nuts. I've got a bunch of wallets. I've gone into Etherscan. You can sign in with your wallet on Etherscan and get an email every time there's a transaction in your wallet. So I save all those emails. I'm a lot lazier than our friend here. I don't do the Excel spreadsheet or the Word document. But
and it's so helpful going back a couple months. Imagine you get audited and they extend the statute of limitations and you're trying to remember what you did on the blockchain 6 years ago. So having good books and records is probably step one to any of your issues. You'll thank yourself later.
Yeah, and again, not to add doom and gloom, but where you don't have the records, the IRS is either going to presume you have zero basis, meaning like the basis is what you paid to acquire that asset, whether it's the crypto or the NFT. They're going to presume zero, and then you sell it for whatever it is, and that whole thing will be treated as gain. But on the state and local tax side, the other important thing, if you're selling things as a business, the amount that you pay sales tax on is the fair market value in fiat as of the date and time of the transaction. Keeping records so that way you can run that exchange to know what was the fair market exchange in fiat at that time is going to be really important for your tax compliance, not just for income, but for other tax types as well.
I'm so glad you brought that up. That's the crux of really where these big notices come from the IRS, is they assume zero cost basis. Having a software allows you to track your basis as you go to and from different exchanges, because these exchanges are not going to track it. And if they issue a 1099, it's going to assume the cost basis is zero, which is the least favorable for all taxpayers, businesses, and personal. So that's one of the best parts about using a software and record keeping to keep track. Getting into the taxation, and I want to hear how this can differ on the state and international level. Basically, when you buy and sell crypto, assuming this is not your primary trade or business, it is a capital gain or loss. You purchase ETH for $100, you sell ETH for $200, you have a $100 capital gain. Where this gets tricky is first in, first out method, last in, first out, highest in, first out. And also, tracking this across multiple assets, because if you use ETH and you buy an NFT, that's considered a sale of the ETH. You have to figure as if you got US dollars for that ETH, even though you purchased an NFT. This can make things kind of a nightmare. And I also understand from our preliminary call, there's a sales tax implication to some of this stuff as well.
Yeah, we have 4 states now that have issued guidance on selling NFTs in particular. They run the gamut from Pennsylvania, which the entirety of its statement is NFTs are taxable. And so it really shows how very little they understand the technology. To the other end of the spectrum, Minnesota and Washington, which are really trying to look at, all right, what's the underlying asset to which your token is tied? Is it tied to digital art? Is it tied to music? Is it tied to real estate? And however Washington taxes that underlying asset is how they're going to treat your NFT when it's sold. So if it's tied to a book and Washington taxes ebooks, then your NFT is also taxable. I think the challenge also, and the, this thing Justin has mentioned, statute of limitations, that's like how long a state can go after you, how many years they have. If you don't file a tax return, they can go after you whenever they want. That's the short answer. But Washington has said for digital assets in particular, they are going to go back as far as they've had the authority to tax the underlying asset as well. So if you sold an NFT with a digital art in 2014, when the protocol was first developed, right now that's fair game for Washington to go back and tax, and they have indicated their intent to do so. So yeah, I don't want to scare everybody, but that is what's coming. It is, I think, something to be aware of as a creator in the space. If you are running a business that is in the blockchain field, it is going to be slightly different from what Justin was saying, where there may be a capital gain on your sale of the asset, the NFT, if it appreciated in value, as we all hope it will. But as a business, you're also going to have ordinary income from your sale of something that you run a business on, your assets and your digital assets that are part of your underlying business, and you're going to have a sales tax obligation. If you don't collect those sales taxes from your customers, it comes out of your bottom line. And that is something that you can save yourself from if you have good compliance protocol set up in the first place.
That's a good point. There isn't any granular guidance in terms of provinces in Canada. Canada taxes NFTs as assets. Statute of limitations there is 7 years. You don't file a return, stays open.
7 years worth of interest.
What a great reason to
7 years worth
file.
of penalties. Yeah.
Every time. My concern is people who don't file.
Yeah.
That's scary.
The best thing I tell clients to do is make a good faith effort to file. Even if you're not sure what you're doing, we're going to be talking about, we've probably already talked about a lot of concepts, but if you put your best foot forward, you use a software, you do your homework, you do your research, you don't even need an accountant. I'd maybe consider talking to one if you have a lot going on. But you want to make a good faith effort to try and help everyone in this room as best possible in getting it filed. Even if you haven't filed 21 or 2020, you really want to go try and get that filed is really the moral of the story. You mentioned ordinary income. This gets a lot of people too. Hard forks, airdrops, anything you receive is taxed at ordinary income at the fair market value on the date you receive it. And when it comes to valuing NFT fair market value, that's a little bit of a gray area. With if you receive ApeCoin in a drop, that's a pretty clear what it was valued at on that date. And you could have a pretty serious income tax obligation, being that you receive it in ordinary income, and if you sell it at a loss, it's a capital loss. So there can be quite a few implications. The NFT valuing that at a fair market value has become tricky. We also touched on the look-through analysis that the IRS is talking about in their latest notice, 2327, where the IRS is, and I think this is a step in the right direction, where the IRS is looking through to the underlying value in the NFT contract and saying, what is it? Is it a collectible? And if so, we're going to tax it at a higher rate. This is an open period of feedback where people can submit their feedback to the IRS. I think this is maybe the direction they should move in, maybe lowering tax compliance burden across the board and look through in not just collectibles, but all areas of NFTs. Is it a ticket? Is it a business meal? Is it a one-time use case where we don't need to recognize it as property and track all of this? What do you guys think on forward-looking guidance from a state and international perspective on how this can get taxpayers, if the goal is to get taxpayers compliant and people reporting this, what's something they can do to ease the burden? Because this is a period where we can submit our feedback.
I think there's some consistency, like we were saying, that you're seeing at the state level, kind of looking through to what the asset is. So in that, I think there is alignment. I did want to point out, you mentioned airdrops being subject to ordinary income. And I think that's going to be the same. Most of the time, the states will follow the IRS, except Arizona did just adopt legislation saying airdrops will have no income tax consequences at the time you receive that airdrop. Our moderator, our introducer.
I think Arizona residency website just went down.
The gentleman who introduced us says, anything can be explained socially by taxes. I like to say tax policy is social policy, and you see states adopting positions like this where they're trying to encourage industries. Arizona clearly wants people in the blockchain space to come live in Arizona and pay their taxes, so they're making it more friendly for you to do so. Friendly being a very facetious term in the tax world. So.
Canada's working on its regulation. I suspect it's the same worldwide. I think it's important that, like Justin said, you might not need an accountant, but you might need consulting to understand how that jurisdiction that you live in treats crypto or NFTs. And that's super important. The US tax rules don't apply everywhere, well, unless you're a citizen. And then your returns are even more complicated. But you need to educate yourself.
Bryan, as a filer, as an attorney, where does legal cross tax to you most, or what's some problem areas that you find just as a regular filer that should be, that you think is that you were surprised to learn about, or is a misconception to people?
Well, I think I remember seeing all over Twitter when people were realizing that airdrops were going to cause them huge tax burdens. I think that was the biggest surprise. But I think it makes sense from a practical perspective to tax the underlying collectible or asset or whatever it is. Because what irks me is when people say NFTs are this, NFTs are securities or not, or whatever. That's just technology. So I like any regulatory body that's looking past that to what the actual associated asset or thing is, will do good for the industry. But yeah.
You asked a good question prior to this, and maybe after this we can get to some Q&A if you guys have any questions. Selling worthless NFTs. Man, has this been a fun area to deal with clients. This is an area of opportunity, in my opinion. There's not any clear guidance at the moment. So there are a lot of opportunities, no set way to get rid of it, other than I advise clients you want it to be an arm's length transaction. So selling a worthless NFT, you want to try and sell it for some considerable value, maybe a penny, maybe somewhere that'll accept your NFT, and get that capital loss. There are also, at the moment, in the US, no wash sale rules. So you could sell something and buy it back if you really are beholden to it, thinking it can go up in value. It's unlike a stock, you have to wait. They're trying to close that loophole. What are the rules in Canada?
Well, Canada does have wash sales rules, meaning, I don't know if everybody knows what a wash sale is. It's basically buying an asset, selling it, buying it back within 30 days. That sale is disregarded. So Canada has that rule. Imagine taxpayers who file on both sides of the border, what a mess that return might be. And that's where you might need a tax pro. If you're selling in other jurisdictions, you might need a tax pro.
Yeah, I would say the last thing when it comes to selling worthless NFTs, there's still a sales tax component to it. It may be worth it, but you still owe that whatever that tax rate is on that 1 cent that you sell. And I think that's where there is a big difference between income taxes. There may be a loss, there may be a gain, and sales taexes where states really don't care. They're just looking at the sales price.
Is there a case where this applies to individuals, or just is this mainly for creators?
It's anybody who's selling. There are some rules at the state where if you're just doing kind of like a casual sale, this is a one-off, think of this as the blockchain equivalent of your garage sale, right? That you probably will not have a compliance obligation at that point. But if you are running this as a business, as a creator, or as a developer, you are going to have to be aware of your compliance obligations. And then it's not just in the state where you are based as your business. You could have compliance obligations in any of the jurisdictions in which your customers are based. I think that raises another really challenging question in the NFT and blockchain world. We know what your public wallet address is, but how many, I mean, show of hands, how many are creators or developers here? How many are selling digital assets here? How many of you know where your purchasers are located? In the state tax world, you have to be able to put a geographic situs on that transaction, a place where it occurs. That's going to drive, is it taxable? How much is it taxable? What tax rate do you have to apply? What are the income tax rules? Is it in Arizona and you get an airdrop for free? And as a business, it is incumbent on you to know that and to figure out your revenue level. Do you have a compliance obligation in the first place?
Before, I want to see if anyone in the room has questions, because I know we're a couple days from the deadline. Okay, great. Eager to go. I love it.
Yeah, no, just regarding worthless NFTs, if you can't find a buyer, can you send it to like a burn address? Does that count as basically that transfer as zero sale, or how would
that
you
trigger
get
bad
rid of
debt rules?
a worthless NFT?
We don't have a clear answer. So it's a gray area. I've been advising clients, take advantage of a reasonable way that it's a transaction that you can get rid of it. I'm a tax pro at Zen Ledger. One of the top people there left and started a project called Graveyard DAO, where you can send worthless NFTs to. So there are definitely people of the position where that is a valid option to getting rid of it. Time will tell. You ask 10 different people, you might get 10 different answers on this.
Yes, hi. You know, the issue with airdrops, I mean, I'm an NFT OG, NFT artist. There's a lot of artists in New York. And I have a whole wallet just for them. And to be polite, I accept it. Because sometimes there are other big name OG NFT artists. And so it puts me in this really awkward place. On some levels, they're a gift. And they should be considered as gifts, as opposed to other types of sales items. So my question is there a distinction between a gift that artists exchange amongst themselves and something that's actually a taxable asset or income or sales tax?
Yeah, it's a good question. I would say you probably want to look at the intent of the giver. Was there a clear document or wording saying it was a gift? I think that's probably a good place to start in looking at this, is get some clarification from who you're receiving it from.
Keep screenshots.
Documentation, going back to record keeping, is key.
Yeah, do you think Discord screenshots of somebody you're chatting in there, oh, I just airdropped this in, it's a gift, take a screenshot of that, you think?
It's better than nothing.
Yeah.
Any other questions?
In the sales tax situation, right, especially in Washington State, they can retroactively go back. If you never established because of doxing your clients and stuff, how do you establish what percentage of your sales was located nexus of Washington?
That's a great question. The state does give some waterfall rules to apply. If you know this, it goes to Washington. If you know, and there's a 6-step stage. I think, at the end of the day, you'd use your best good faith effort to figure out, is there a location? What I expect when we start to see the state auditing is that they'll default, quite frankly, to census population and say, Washington has 2% of the US population, therefore 2% of your revenue from these sales theoretically should be subject to tax in Washington if you have no other way of proving those records. I think personally, as a tax advisor, I think that's wrong. I would challenge that with any one of my clients, especially. But I think the default then really is looking in your own state and treating it all as sourced to you internally. If you have zero other way of making a distinction, is your purchaser even in the US in the first place and where they're otherwise going? I think this is one instance where it really is important to try to work with a tax advisor a tax attorney or an accountant to try to figure out some internal protocols and rules for yourself as a business of what record keeping you're going to keep and how you're going to apply those rules to figure out, do you have a compliance obligation or not, and which state's rules to follow.
Do we have time for a couple more questions? Yeah? One more.
Is there any kind of de minimis exception, like if you're an individual who only has a little bit of Ethereum or just like one?
That's a great question. That's a really great question. That's something I was considering writing to the IRS and mentioning to maybe include something like that. So small-time owners, let's say you buy it in your Venmo, you bought $10 of Ethereum. Can there be a de minimis threshold? Can there be a simplified level of reporting if you're under $10,000 worth of transactions where you don't have to go through the whole exercise of calculating your gain or loss on Ethereum to buy your worthless NFT and then go send it to a burn address? Yeah, there is
gas
not
fees
there
on
is
top of that you're going to take as your losses. Yeah.
there is not at the moment, but that's a great. I'm not sure at the state level, but at the IRS level, there is not a de minimis. But that's something that should be in place and something that I hope the IRS does consider.
And if you just hold it, there's no tax implication, right?
No, the tax consequence happens when there is a transaction, when you buy it or sell it. That's when.
Or receive something.
Yeah,
Yes.
Yeah. I mean, there's speculation not specific to the blockchain space right now with the IRS on, particularly for high net worth individuals and high income individuals, whether they have to report their unrealized gains every year with tax on it. And I think if that is ever passed,
Certainly an
which I think is-
FBAR
yeah, I think that's-
requirement for foreign bank accounts.
Yeah. But when it comes to the state level and any sort of de minimis, there's no de minimis threshold in the state in which you are a resident. But to the extent that there could be an income tax implication for the state where your buyer is, your purchaser, and you're selling, there are de minimis thresholds. And right now they're pretty high. For sales tax, the lowest is $100,000. For income tax, it usually starts about the same. So you're often not going to be subject to tax in more than one state. Unless you are already transacting business in multiple states. So, yeah.
Thank you very much, guys. We'll be around if you guys have any other questions.
Thank you very much. Possibly the most profitable, or at least